Good morning, everyone, and welcome to the European crossover webinar. And we saw quite the sell-off in the equities markets yesterday, and um, also compounded with compounding that sell-off or keeping it sustained lower was also David Tepper, who stated that U.S. equity markets are the most overbought he's seen since 1999. So that certainly weighed on that. We are also seeing after a bounce, which I'm not sure was related to. I was trying to look at the notes, but we've seen that coming down now. We'll go and take a look at the S&Ps. And you can see here, we've just been on came in and saw this move here, and we kind of congregated there, and we've just been gently just sliding right back down here. And it's obviously a lot easier just to sell these markets, and we're just sliding back right now. And some ECB headlines coming out at the moment. And we look at that, we're just continuing just to slide right down. Just one after coming up here, we're just one steady line just all the way down here. We've made a rally back up here into this 28.23, which it looks like I thought initially was going to hold the market on the way down, but we had rolled lower. But this was our second trip down here at the time. That 28, we'd been those Asian lows, or not Asian lows, but what is it in the Asian lows, the previous session at 28.25, and then we came down here, and then when we broke that a second time, we actually came down there and then made a second trip in the session. That was it. It wasn't going to hold, and they continued to sell it off, and this market just cannot seem to go on and pick itself up now. And seeing the similar things here with the NASDAQ also. And also some similar moves here in the Russell as well as in the Dow futures. And as far as the calendar out today, as we come into the States, we're going to have import-export prices. No other real data coming here during the European session. But we do have import-export prices as well as initial jobless claims and Canadian manufacturing sales. Move this out of the way, or we're going to get into the news. Okay, the Australian dollar absorbs jobs blow and bond demand a buffer. The Australian dollar slipped on Thursday after data showed the largest ever drop in jobs in April, as much of the economy was locked down to tackle the coronavirus, though dogged demand for the country's bonds limited the losses. Employment fell by a staggering 594,000 in April, above the already grim forecast of a 575,000 drop. Without these, the jobless rate would have hit 9.6%. Analysts note that the total hours worked dived a record 9% in the month, pointing to a steep fall in economic output. The measure captures the massive loss of jobs, stood down workers, and the cutback in hours, said NAB economist Kaksin Oxwang. Total hours worked best captures the unprecedented economic shock to the households. This hit will limit the bounce back in spending and activity as the economy recovers, even with the dramatic increases in government assistance. The only saving grace was that the markets had fully anticipated a horrific number, limiting the sticker shock. Australia already had more success than many countries in containing the virus. So much that states are loosening restrictions on shopping, eating out, traveling to work, which could at least help stabilize the economy. A second wave of the coronavirus, weakening the world economy and commodity prices, and potential deterioration of the U.S.-China trade relations in the run-up to the U.S. election remains downside risk to the Aussie. But if the health and financial crisis are over, Aussie dollar may be able to post its lowest point several months sooner than or the existing forecast suggests. The bond market remained upbeat, following a very strong sale of new debt on Wednesday. And the dollar nears 3-week highs as Powell squashes negative rate hopes. The dollar climbed towards a 3-week high on Thursday as the appetite deteriorated broadly after the Federal Reserve Chairman Jerome Powell dismissed speculation about negative interest rates. Though Powell is the latest in a parade of policymakers to brush off of the notion they might push rates into negative territory. While the Fed chairman also urged more fiscal stimulus to support the economy, Mark Heffley, chief investment officer at UBS, said the ongoing partisan tension suggests additional stimulus is unlikely to immediately materialize. Powell's comments sent investors scurrying to the relatively safe haven appeal of the greenback. Against the basket of the rivals, the dollar edged 15 tenths higher at par 30, hovering below a 3-week high of par 44. The downbeat message from Powell has contributed to more of the risk-off trading conditions overnight, which has also helped support the dollar. Among major currencies, the Aussie dollar led the losses after data showed the country shed jobs in April at the fastest pace in record, suggesting more monetary and fiscal easing may be needed. And the pound also tumbled below the 122 for the first time in more than 5 weeks after Wednesday's data showed Britain's economy shrank by a record 5.8% in March as coronavirus crisis escalated. Investors are now focused on the data for the U.S. and Europe in the next 2 days for more clues on the depth of the downturns. Jobless claims data is due on Thursday, while Eurozone reports first quarter GDP data on Friday. So with that, we'll go into the analysis. What the heck is this? So the euro ping ponged the bias chart yesterday, touching both the bias chart support, high and low. You can see yesterday we had the resistance at 893. I think the high was 896, and we had the low at 807. And the low yesterday was, looks like it was 811. But like I said, we basically ping pong back off of these highs and lows, which we had for our bias chart support and resistance. Support on Thursday will be 776 with resistance at 869. Looks like another tight day here in the euro. Looks like nothing really has been happening until we get into the U.S. session. Cable finished on its lows, and the bias chart support will be the challenge point of 2122 with resistance at 2330. So you remember that we said that if we closed, we had a daily close below 2285, that would open up to this market to move lower. And yesterday we had our bias chart supported 2217, and the low was looks like 2213 or 2212, so not bad. With the high as 2333, and the high was 2339. Not bad. So the challenge point is going to be that target they were talking about, and which was 2122. If we got a daily close, which we did back here, below 2285, so that is now going to be our bias chart support. See if we get there, which is going to be 2122. Pretty big push down, but that's what we're going to have our support there. I think we potentially will get there, and resistance is going to be 2330. I think that's not right. 2330. We've already come all the way down. Resistance. Yeah, that's what we have. 2330. Although this 2285 was a breaking point, it should be here, but it's not allowed for much of a jump. It's too far up high for that market to jump back up unless something material happens, and I don't see that happening. Right there, 2292, 2292. And let's go and move into the Aussie Dollar. So the Aussie closed lower for the day after challenging 65.24, coming just below the bias chart resistance, which was 65.30. Support remains 63.97 with resistance at 64.93. Okay, so the only thing we did move was the resistance lower. And we'll go move into the Kiwi. The Kiwi saw a good downside sweep, closing just below 60 cents into the bias chart support of 59.90, which is what we had for support. Support will now be 59.60 with a potential return to 59.14 over the next few days. Resistance will be 60.42. So we had 59.90 and the low for the day was 59.78. So it wasn't too bad. It could sort of fall all the way back here. We're looking at 59.60 for today. Resistance be 60.42. Once again, on the bias chart, resistance and supports, sometimes they will come close to tagging the higher low. I mean, like on the year, I think it is off by four pips or something like that. The same thing with the low, I think was only wasn't off by that much either. But it just means that those are areas that we expect there to be volume coming in where they'll try and put up a fight. So we've seen that same thing with the Aussie yesterday also. I think we had 65.30 and the high was 65.24. So doesn't mean that's going to be the absolute high or the absolute low, although we sometimes find that to be the case. But we expect a pretty good battleground at that area with some volume. So with that, we'll go and move into the dollar CAD. So the dollar CAD posted a short-term hanging man formation on Wednesday. A pause is in order and support will be 40.19 with resistance at 41.43. A close above 41 cents would invalidate this little formation because it's not like this has been after a rally. So that's why you kind of call this into question. I mean, if you look at it on a very, very short-term basis and the way this market's been going up and up and down, then you could say, well, yeah, that's what I'm saying here, short-term pause. Had it been after a successive move, then and the wick was longer, then you have a true hanging man. This is just kind of like in the middle range of it. But once again, they pulled up, and we've been kind of yo-yoing up and down. So that's what I'm saying. A short-term pause or a pause is in order. But if it was after a big move, then there would be a potential for a top. But that's not the case. We're just looking at potential for possible pause here. So we're looking at resistance is going to be 41.43 and support's going to be 40.19. So the dollar peso paired back a bit on Wednesday without challenging the resistance level, because remember we had that as a key level. Now back again, 24.62. Certainly looked like it was on its way, and with the sell-off we saw in equities, you would have thought we probably would have moved even higher. We just haven't seen that to be the case. It paired back without challenging the resistance of 24.62. That's the pink line here, which remains resistance with support now at 23.86. So once again, in the European session, we're just very dead in the water in these FX pairs. So this remains here. And actually, with support, that's going to be still the same, 23.86. So nothing new there. The dollar yen continued to weaken, albeit in a tight range on Wednesday. Support remains 661 and with resistance at 742. So all we're doing is tightening up the resistance a bit. Boy, during the European session, these FX pairs are dead in the water. Holy smokes. So the dollar index tested the lower band of the bias chart support at 99.52, holding at 99.57, closing above par. Resistance will be par 52. That's up here, this level here, with support at 99.78. Once again, dead in the water during the European session. Oh my God. So we're just going to move this up here. This wasn't bad because the low was 99.57 and we had 99.52. But we're going to move this up to 99.78. And resistance will be par 52. Well, that'll take care of the majors. I mean, these markets are really dead during the European session. Let's go move into the cross rates. You see, crude oil, I'm hearing on the Squawk some IEA headlines, and crude oil's still holding up relatively well. So looking here at the Kiwi yen, we saw a pretty good fall down here. Can't go here with this level, but we'll go with the openness from this bar as support, which is going to be 63.68. The yen pairs, we've seen some pretty good movement here. And resistance. $64. Well, it's a little bit close here. Right there, coming across here. And just above those highs. Go 64.29. And we have seen the euro continue to slide back after this nice move the prior few days. Support now, we'll go and take a look at the 2-hour chart. Actually, let's go and take a look at fib. Well, it looks like we came in right to the 61% there, 1534. And we'll just say that that is right there on the nudge. We'll go with that, the 61%, 1534. Resistance. Right there, 15, let's call it 1598. Finally, I was trying to see this thing trying to pick itself up just a little bit. Boy, just a little bit is the case. Barely moving here. And I've got this bar here at 68, 61, and that's the same resistance by 1 pip difference. So we'll leave that there. That still remains. And then the support of 66.72. We're going to the 2 hour and we can see something a little bit closer. Right there. We're going to move this up to 66.96. And onto the Euro Kiwi. We had 81.12, and the high so far today has been 81.09. Not too bad. You can see this little cluster right in here. That's 81.42. That's going to be resistance. It's 81.12. Kind of held it in check. But as we roll into tomorrow, and depending what happens with GDP, it's the end of the week. We may see some further short covering. So with this grouping here, you see here, comes smack dab in the middle. Go with 81.44. Looking out through to tomorrow, but this 81.12 has been okay there. Support on a dip is going to be right there. 79.24. We'll go right here, right there. 79.50. And onto the Aussie yen. Well, we come right here into this level, and we're just going to say just go with the levels, but there is right there, just below that, 60, and now let's hit it, 68.55. So we'll go with that, 68.55. There's going to be resistance, 69.19. Just call it 69.20. Let's see if we can find a fib on this, if there's anything close by. Yeah, the 50% right there. 29.88. Resistance at 31.20, but we want to give it a little bit more room. Right there, 31.30. On the upside for the guppy. Boy, these FX markets are dead in the European session. Holy smokes. We're just going to put the low right here at yesterday's low, and that's going to be right there. That'll be the support. If they trigger past that, then that's going to, I mean, to get past that, that should trigger stops. So go with 88.72. That'll be resistance 90.64. We had 90.62. Let's just kick it up 2 pips. That does it for FX. I mean, we're pretty I would say quiet and dead at the same time, but sheesh, nothing's happening. We did have some IEA headlines out. They were saying that the cuts that they believe is enough to support the market, and you can see here we've been still holding up pretty well here. Pushing this upper region here. Right there is 26.98. That's the upper area here. See what happens. Also, let's take a look here with the gold market. We're just kind of sitting there. I've heard some people talk about this is close to breaking out. We'll see. But really, we need to get above right there. That'll be some. That's a good level right there. 17.32. So we need to get past 17.32, then we really start to kick this thing up. And we'll just take a real brief look at equities. We're really having a tough time, but important level here is going to be that 98.23. You can see they even got above it. The low in Asia the previous session, not last night, but the night before, was 28.25. So when the market came down and we challenged down there on the first go yesterday morning, I think the low might have only been 28.26 or whatever. But anyway, we rallied up to, I think at the time I actually got long in that area, but we rallied up to, excuse me, I think we rallied up to like 28.38. And at that point, I was saying I think we have a bottom in place because we'd held that. But as we started to slide back down, and we challenged him, thinking, okay, well, they'll try and see if they're able to take this low out and hold, which initially it looked like they had done. I thought, okay, we can have a bottom in place. But when we came back down to challenges, that wasn't good at all. I thought, okay, it's support. Let's see if we hold. But if we get a foothold, that is not good. And certainly that's exactly what happened. And I was indicating in the chat room, that's usually when we make a second trip back up to what I think is going to be a key level, whether it's to the upside or to the downside. The second trip, I don't like to take on the market because it's too easy. And matter of fact, we were already getting some momentum to start with, but I was going to say it's not easy, but I'm saying it's too easy for the bottom to fall out. At the time I was saying, who knows what lurks below the dark waters, and sure enough, that's exactly what happened. We just started pushing lower and lower, and then of course when David Tepper came on CNBC and said, hey, equity markets are the most overvalued I've seen since 1999, that was just it. Then we just kept these markets under pressure. But we have gone back and forth yesterday before the U.S. close. They think the low was 27.96. We got to 27.93, and then the market ripped 18 handles up, then turned around and went right back down, made new lows, then popped right back up again. And you've seen here then in the Asian session, we challenged this 28.23, and we paired back. And right now, that's going to be the key going forward. As we come to the U.S. session, nothing's been happening during the European session, so really it's just a matter of just waiting until the U.S. session opens up and see where we take it from here, and whether that next area down here that 27.88, yeah, that ended up holding here when they broke them yesterday also. We'll see if they can go back down there. But that's all we have for today. Thanks for joining us here on the European Crossover webinar. We'll see you in the chat room.